Good morning, everyone. I hope everyone is having a great morning, and I thank you for joining us this morning in the Nadex webinar room. Today, we're going to be talking about neutralizing the pitfalls of the spot Forex markets. Now, for those of you that are in the room, I would like you to read the disclaimer. I think the most important thing in the disclaimer is don't trade with money you can't afford to lose. This presentation is neither a solicitation nor an offer to buy or sell futures, binary options, or Forex. And again, I would appreciate it if you would read the disclaimer, and then we will get started. Now, I did have a question about what I think about the 5-minute binaries and do I trade them. You know, which binary option you choose to trade is a personal choice. 5-minute binaries are just too fast for me, so I do not trade them. I do trade the 20 minutes. I generally like them a lot, but the 5 minutes just really too fast for me to make a decision in the market. Now, for those of you that do not know me, I'm going to give you a little bit of background. I have 15 years of trading experience, and I also started out on the Forex market. So that is like my go-to market because it does truly move 23 hours a day. Now, I started out with a company that actually programmed indicators, and, you know, I just absolutely fell positively in love with price bars. I thought this was the greatest thing since sliced bread, you know, and I've been trading ever since. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm a frequent contributor for Stocks and Commodities, Traders World, and Top Shelf. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Conference, and I'm an author of the Trading Nadex Binary Options, Keeping It Simple Strategies. Now, I want to go through the biggest challenges that most traders face. And the main one is capitalization. You know, most traders will start out with, you know, $1,000, $2,000, $3,000 account. They don't really understand money management, and they actually tend to trade more contracts than they should. Of course, they lose money, and then they get scared of more losses, which will occur. They start jumping out too quickly because they're so nervous about losing more money, or they just simply stay in too long and they don't take profits. You know, I'm a big advocate, and your job as a trader is to take profits when they're offered. But it takes time to learn that skill. It's not something that just comes automatic. Now, most traders cannot withstand the drawdowns that all traders will have at one time or another. You know, you may have a month where you make $1,000 and the next month you lose $500. If you're not able to withstand that $500 drawdown, then you're in problems. The other thing is discipline. You know, it's quite easy to say, well, I would have done this or I would have done this, but when your money's on the line, your emotions will take over like never before. So these are the biggest challenges for any trader. And most of this, when you're trading the Forex market, these are the unknowns. You know, you don't really know what you're going to make. You don't really know what you're going to lose when you're trading Forex because you're trading leverage accounts. Now, leverage accounts require margins. And ever since the Swiss National Bank crisis in January 2015, they are constantly changing. I think this month alone I have probably received 10 notices of margins changing because they're expecting higher volatility in the market. A great example was the British pound US dollar. On Friday, November 4th, the margin requirement was 3%. Then on Monday, they increased it to 5%, and the leverage went down from 1.50 to 1.20. And this is very, very common right now. Now, I advise you to have stops anytime you are trading Forex, but that's not 100% guaranteed. Sometimes the price will never touch the stop, so actually instead of losing 10 pips, which you thought you might lose, you end up losing 50 to 100 pips. That has occurred. It did occur with the Swiss National Bank. It's just a really big issue when you're trading Forex. And then you also have the issues from the algorithmic trading and fat finger trades. Now this on the British pound was a fat finger trade on October 6th. And the cost of the trade, and this is, something that is ever changing as well, it went from 1.8 pips to get into the market and 1.8 pips to get out of the market to suddenly being 150 pips in a matter of seconds. So there's a lot of things here you cannot control. And, all of this is considered the cost of the trade when you go in, what you're paying versus when you come out. So this is something you really have to watch when you're trading Forex. Now with binary options, you're not trading a leverage account, so you don't have margins that you have to contend with. In fact, what you're doing is you are deciding on entry what is the maximum risk that you are willing to lose when you enter the trade. This gives you control, okay? There are also time-based trades. So it's based on the price being above or equal to less than the strike price at expiration. And they have what's called an indicative price index, and that's what everything goes by, and I'll show it to you when we go over to the Nadex demo platform. Now you're also able to trade more contracts since margins are not required. Again, you choose your risk level on entry. So you can decide, I'm willing to risk $100, $50 a contract. Well, that's 2 contracts. And you have a much lower fixed cost, especially if you're trading 10 contracts or more. If you're trading under 10 contracts, for example, 9 contracts or less, then it's $1.80 a round trip per contract. But if you're trading 10 contracts, then your cost is capped at $18 a round trip. Now that does give you an advantage if you're trading 10 or more contracts. Now you also need to be able to measure your performance as a trader. You have to design a trading plan so that you identify your entry points, you identify your exit points, and you identify where you take profits. I always recommend that traders keep a trade journal. Now that means you take snapshots. It shows your thought processes on your entries and on your exits. This will allow you to measure not just your thought processes, but how well are you performing and are you following your rules? In other words, do you have the discipline to trade your trading plan? Now, in order to calculate your performance, there's 2 ways that you can calculate it. One is risk to reward, and this is used by most futures and Forex traders. Because they are trading leverage account, the return on investment poses a problem because you really don't know truly what your risk is. So if you're doing a risk to reward, then you can say, okay, my actual risk is X amount of dollars, my profit was this, and you can calculate the risk to reward based on that. And what you do is simply divide the profit divided by what your risk was with your stops. That gives you a risk to reward ratio. Now on binary options, because we know exactly how much our risk is, we can use a return on investment. Now the calculation for that, there's two calculations you can actually do. It's gross profit minus the risk divided by the risk, and that gives you a return on investment. Or you can use a simplified one, which is your net profit divided by your risk, which is your investment on entry, and multiply that by 100, and that gives you your return on investment. Now, with binary options, you do control the risk that you are willing to have on any one binary option. Now, in general, an at-the-money binary option is going to give you about $50 of risk. An out-of-the-money binary option, excuse me, will give you anywhere from $40 or less. And an in-the-money, which means price is already trading either above or below the at-the-money, is going to give you a higher risk on the binary option, but it also gives you a higher probability at that moment for the option expiring in your favor. And we're going to look at all three of these today. Now, if you are selling a binary option, that at the money is where price is currently trading. For example, price is at 101.38, which happens to be the strike price, so this is your at the money strike. To sell that would be about $53 in risk. To buy it would be about $53.75. Now, if you're going to sell an in the money, it would be one strike above the at the money. If you're going to sell the out of the money, it would be one strike price below. So the out of the money would be 101.34. The in the money would be 101.42. Again, that's for selling the binary option. If you're buying the binary option, your in the money would be the strike price directly below the at the money, or 101.34. The out of the money binary option, if you are buying, is one strike price above, which is 101.42. Now, we're going to look at an example between spot Forex and a binary option. Now, in this case, the margin required at this particular time for the British pound US dollar for one full contract is $6,000. Now, that does vary by broker. Now, one full contract is equal to 10 minis, or it's one full $100,000 Forex lot. Now, the cost for entering is about $30. Again, since you're trading a leveraged account, I would always suggest that you use a stop order. And you can see I have a stop order down here at $23.80. So basically, you're risking $180 on this trade. Now, this is one of the things that most people don't realize about spot Forex is if they started to increase the cost of the trade. Let's say when you went in, it was 3 pips. But then all of a sudden they expanded that pip spread to 20 pips, you would immediately be stopped out regardless of whether the price is there or not, because this is what happens when they increase that pip spread. And I've had that happen to me a lot of times. Now, there is no time limit, so you could be in this trade for as long as you wanted to, because spot side has no time limit. Now, if you do hold until the markets close at 5 o'clock, and then the next session opens right now at 7 o'clock, Asia opens, between 4 o'clock and 7 o'clock, that pip spread will increase to 20 pips. So you're going to have to allocate for that when you're setting your stop. It makes it a little bit confusing, but that's the way it works on the spot side. Now, this is a binary option, and it was done at the same time, and there's no margin required, and this is based on trading 10 contracts, okay? So you have a risk of $28.50 per contract. Now, the fact that the risk is $28.50 immediately tells me that this is an out-of-the-money binary option. Again, it's knowing, you know, that at the money is going to have a $50 risk. If your risk is less than 50, then you're out of the money. So trading 10 contracts on this, your total risk was $285, and you pay that when you enter the trade. So that's the most that you can lose. You can never go more than $285 for a loss. The exchange fee is $18. Doesn't matter what's happening, this is your exchange fee because you are trading 10 contracts. If you were trading less than 10 contracts, you would pay $1.80 round trip. Now, round trip just means in and out. Now, you can exit at any time with Nadex. If you held this until expiration and the indicative price index is greater than your strike price, which is 24.08, then you have the potential to make $71.50 per contract. Again, that's not including your exchange fees. But this is based on every binary option has a maximum payout of $100. So if you subtract your risk from $100, it gives you your maximum profit potential. Because you know the maximum amount that you can make on this trade, I think it decreases the greed factor, okay? Because you know at any given time you can only make the maximum of $71.50 per contract. So then I can weigh, okay, let's say that I made $60 within 15 minutes. Do I want to continue to hold that contract for another 45 minutes, or do I just want to go ahead and close the position with the $60 profit per contract? Okay, Edgar, you're asking, but what if you were trading binary options? The trade goes in your favor but rallies 100 pips in your favor with spot Forex. You would get rewarded much more than just the binary. That's true. You would. But again, you know, are you actually going to exit at the 100 or 100 pips, or are you going to say, well, I might get another 50 pips? You know, what would you actually do? Okay, because it's unlimited. Yes, somebody has to be willing to take the other side of the binary. You're absolutely correct, Chuck. And most of the time I have not had any trouble doing that. But, you know, again, it depends on how many contracts you're trading, Chuck. If you're in there with 200 contracts, yeah, you know, you've got more of an issue there. If you're there with 10 contracts, as long as somebody is there that's willing to take the opposite side, you can get out. And that part of it, because the Forex market is so big and there are a lot of binary options for the Forex, I haven't experienced any issues on that. But again, I'm not trying to trade 200, 300 contracts either. Okay, now let's see the return on investment when you're, or risk to reward on the Forex side. And this is using the same trade setup. This is the spot side. This is the binary side. Okay. On the spot side, if you were to exit, you made $200. But again, in my opinion, you're going to have to use the margin because you could not have entered this trade without $6,000 margin in your account. So in this case, you're getting a 3% return on investment. Over on the binary side, we do have an exact risk, so it's easier to measure, and this is 158% on the binary option side. Now, the return on the risk to reward ratio for the binary is 1 to 1.58. The risk to reward ratio on the spot side is 1 to 1.06. Okay? Does everybody understand that? Edgar, is there people trading hundreds of contracts in Nadex? I really don't know. That's not a question I could actually answer. Now, before we go and look at some examples on the binary side, I want to give you my contact information. My website is tradershelpdesk.com. You can also go to the blog. I write a lot of articles on the blog, and it's blog.tradershelpdesk.com. You can also email me. You can call me. And this is my cell phone number. As long as I am not in a trade, I will answer the phone. If you do not get me, you can always leave a voicemail and I will return your call. Now, I do want to look at some examples on the Forex binaries, okay? But I want to reiterate that these examples are solely for educational purposes only, and they are not to be construed as trade recommendations. Okay? Now, I'm going to, give me just a minute. I've got to bring over the trading platform. And I'm going to make this really easy today. Let me scrunch it down a little bit. Now, what I am looking for any trades that we look at today is I want to see either a blue dot at this plus sign or a red dot. A red dot would tell us to take a short position at that price. A blue dot would tell us to take a long position. This is a radar screen, and it allows me to monitor all of these markets within one type of scanner window. You can see under this column, it tells me everything that is currently at an ATR. So I know that the Aussie dollar was at an ATR right here. Okay? And the ATR is very simple. It acts as support and resistance. Now, I also see that the euro-yen is also close to an ATR. So what I would want to see on this one is that price comes up to 122.59. Let's see if we have one on the British pound. And you can see that the dot is here. That would tell me to enter at 26.18. Now, that's the at the money strike price, okay? So let's go over to Nadex and let's see all of the options that we would have. And this is 11:30, so I want to go out till 1 o'clock. I use the 2-hour binaries for this. Now, you have a lot of different options when you're trading Nadex binary options, okay? And again, these are only for educational purposes only and not trade recommendations, okay? So we have 26.18 is the actual strike price. Do you see how price is currently trading below that number? So the in the money would be 26.14 because price is trading below that. You're going to pay 64.25 as risk, and your potential profit is $35 if the indicative price expires below that. So I'm going to do this one, and it moved on me because I was talking. This is the in the money binary option. The at the money is 26.04 because this is where price is currently trading. So on this one, you have $47.25 of risk and a maximum profit of $52.75. And again, okay. Now the out of the money binary option is $25.94. Now remember, you have an hour and 33 minutes on the expiration. So we're going to do this one, and we have about $30 of risk on that one. Now, which one do you choose? It depends on what your risk parameter is and what you are comfortable risking. I generally will do the out of the money binary option. I'm a cheapo, okay? So I do the out of the money binary option. Now, this 26.14 gives you a slightly better edge because price is already trading below this number, okay? The at the money, I would consider that 50-50, okay? It could go your way. You have a slight edge. It's not a huge edge, but it is a better edge than what the out of the money option is. Does everybody understand that? Yes, ATR is average true range, Ron, and all I have done is simply incorporated that in with a trend algorithm, and the plus sign just tells me where the average true range is, and it works really good as a support and resistance. What is the rule of thumb for funds per contract in binary with your style? I'm not sure I understand that question. Could you be more specific? Is there any specific indicator you use to take these out of the money strikes? Again, I generally use the average true range that is built into my trend indicator, Edgar, but I also add, stochastics. I'm a big divergence. I do directional volume, which also I read divergence on. It depends on where you're at as to how advanced you are with indicators. How much funds do you need to trade with your style? Would 5,000 be enough for 5 contracts? Well, I don't really like to give out numbers, but I'm going to show you what I would do. Okay, if you're doing at the money and it's $50 per contract and you want to trade 5 contracts, that's $250. If you're willing to limit that to, let's say, $40, you want to trade 5 contracts, that's $200 per trade. So then you come over and you say, okay, if you have a $5,000 account, I would not want to risk more than 5% on any one trade. So the only ones I would be able to do would be the ones that are $40 or less. And that's my money management, okay? And everybody has a different money management technique. You know, I don't like to risk more than 5%, okay? So, yeah, I like the out of the money. There are times when I will do at the money. You know, some of this really has to depend on what the market is doing at that particular moment in time. You know, if you wanted to go, for example, deep in the money, you know, this is telling me, hey, there's $18 of potential profit there. Are you going to risk more for that? Yes, you're going to risk $82 to make 18, okay? But, you know, and this is the other thing that you should consider. Well, if I can get into it. I'm talking and it's not doing it. All right, and to me, this is all about return on investment, which you can actually do with the binaries. Let me escape out of that. All right, if you're risking, you're going to make $15, but you're risking 85. Okay, what is the return on investment in this? And it's 17%, okay? Well, 17% is not a bad return, okay? But you're going to have to be accurate a high percentage of the time because you're trading something that is deep in the money. That can be a profitable experience, you know, especially like if you choose a time that the market is moving very slow. You know, you have a very small likelihood that the market is going to move 2 strike prices up. Hey, you could sit here and do these all day during a slow market period and make money, okay? Yeah, there's a lot of variables that can be put into this, Chuck. So I'm not going to, you know, go real deep into that because it depends on, you know, what kind of options you're doing, what kind of indicators you are doing. It depends on what your winning percentages is. So if you have 5 consecutive losing trades at 5% risk, you'd have a 25% drawdown, but then would your indicators really give you the 5 consecutive losing trades? It depends on what your methodology is and what your percentages have been. There's so many variables that would go into that, you know. Volatility. Yeah, and when you have increased volatility, Edgar, you do have the strikes widen on Forex pairs. Remember what I just said? You find a period when the market is moving very slow, which takes volatility out of the equation. Okay, you know, these are not ones I would do when it's a high volatile period. But let's say, okay, we all know typically between 12 and 1 o'clock, what does the market do? it slows down. Everybody goes to lunch, and there's just really slow market movement. You know, you might say, okay, this is the time period I would want to do deep in the money options, because chances of that going up and taking out your deep in the money would be lower than like at 9:30 in the morning when the market opens. Does everybody understand that? Yeah, typically when I do news announcements, I really don't straddle them. I just pick a decision. Either I think it's going to go up or I think it's going to go down. And you know, a lot of this is what kind of indicators are you using. On December 28th, I'm doing a webinar on leading indicators. You know, if you're doing out of the money binary options and you're using leading indicators, then I don't think your edge comes from the binary as much as it comes from the leading indicators. Yeah, I don't really do fundamentals. I do technical analysis. Divergence is a leading indicator. Volume divergence is a leading indicator. Reversal bars, you know, here, right here, you have a reversal bar, okay? It's, it made a high, closed on the low. This is a leading indicator telling you that the next bar would be lower, and it was. You know, there's all kinds of leading indicators, and, you know, again, December 28th, I'm going to be doing divergence with the stochastics. Yeah, you use tick count for volume, Edgar. That's the only thing that you can actually use on Forex, because it doesn't have true volume. You know, you can, for example, market profile, cumulative delta, you know, it just depends on how complicated you want to get. You know, and I mean, I can get real complicated. I want to keep it simple. So, I'm not sure about that question, Sammy. I mean, this is the stochastics here, okay? And, you know, this is just a preview while we're waiting on this. Wrong one, drawings. Okay, you made lower lows, you made higher lows in the stochastics. That's divergence, okay? This said, okay, at the end of this bar, that this market was going to go up at the end of this bar. So you knew that right there. Did it do that? Yes, it did. That's a leading indicator. Now, did it help that you had a reversal bar? Absolutely. Do you know where Nadex Forex data is provided by? Chip, would you like to answer that question? Okay, I'm going to let Chip answer that question instead of me. Oh, the other thing I'm wanting to show you is the indicative index, because the indicative index is the most important thing on here. Okay? Now, you have a strike price, which is $25.94. The indicative index currently is at 26.05. Okay? This indicative index that's what you're looking at expiration. Okay? It also shows it to you right here as well. Let's go and see if we can get into any other troubles. We have the euro US dollar. Okay? And again, this is coming over here to the 15-minute chart, which happens to be one of my favorite time frames. So in this case, this is at 0740, okay? So we still have these going on, and again, I'm switching markets, and I just want to remind everybody this is just for educational purposes only. It is not a matter of trade recommendations. It should not be construed as me giving out trading recommendations. Okay, now I'm going to shrink this down some. Now I know the ATR is at 0740, okay, and I'm a little bit late to this game. So in this case, you could buy the deep in the money at 0746, 71.50 in risk, or 72 now, if I can get into it. And that also has a reversal bar forming right there, which is always a good thing. Okay, you can do another in the money here. And these are all the different variations, okay? It's going to be 65 now. And it's just, okay. Oh, it got me in. And at the money would be 53.50. Okay. And if you wanted to go out of the money, it would be 42.25. And again, this is based on your risk parameters. So this trade, you've got 4 different ones, depending on, what your risk parameter is. Okay, you've got 0746, this is deep in the money. 0750 is in the money. 0754 is at the money. 0758 is out of the money, okay? And if you really want to get extravagant, okay, you've got 0762, that's 10 pips from price. Well, it may even go up this far. So this is giving you an additional out of the money, okay? And let's see if we can get in. So now you've got a total of 5 strikes, okay? Well, you have an ATR here. Price is pulled back to within 6 pips of that, okay? This is going to provide support for price to go up, and you have a reversal bar that is in your favor, okay? And this is really me keeping it very, very simple, okay? So now you've taken 2 trade setups, okay? You've got 5 over here on the euro. You have 4 over here on the British pound, okay? Which ones are best? It depends on what your risk parameter is, okay? If you only want to do out of the money, then you did 0758, 0762. If you wanted a higher probability, you could have done 0746, 0750. If you wanted at the money, well, that was 0754. Do I use Fibonacci in my Nadex trading? Not really, because typically what I have found is that you know, the Fibonacci numbers are going to coincide with the ATRs. And I like to be able to scan very quickly and see where I want to enter. You know, in this case, you see this radar screen really is the only thing I'm looking at, okay? And it says price at a ATR, price at a ATR, price at a ATR, price at a ATR. So, you know, I'm not having to scroll through all of these binary charts. I know exactly which one I need to look at. Now, you know, on these that are, you know, deep in the money, for example, this one, you know, we were risking more money on that one, but we could also say, okay, if this comes below 2604 or if it comes down to 25, you know, 94, you know, I might think about exiting that because it might be getting too close. Would using a regular ATR indicator give you the same numbers? A regular ATR indicator just gives you the actual range of the bar. So if I go in here and I just put an ATR on here, it's not going to give you that value. This is something that I designed. So if I can find it, this is what the average true range looks like. So it's not really going to give you this plus sign. So yeah, it's custom. And the only thing that I like about it is, you know, again, I could go in here and look at everything and say, okay, I need to look at this. I need to look at this or this or this, you know. And it actually has a setting on it. For example, if this gets within 10 ticks of the ATR, I have to add an extra 0 because of the digits. Then, you know, this tells me the British pound is the only one that is within 10 ticks of the ATR. And I mean, you know, when you're trading a lot of symbols, you need a way to actually scan very quickly to say, hey, this is the one I want to enter. Yes, this is the one I don't want to enter. You know, because otherwise you're just pulling up a lot of charts all the time. Does everybody understand that? And that's the reason I like the scanner type programs. It just tells me at a glance, okay, I can do this. Now, does anybody have any questions? Because this is really just showing you how many different options you have according to what you want to risk on a binary option. And I know I can never lose more than what I just paid on that entry. Any questions today, guys? Well, I don't trade the 5-minute binary, so I don't have any recommendations on that, Edgar. Can you set this up on Thinkorswim? I don't know. I don't use Thinkorswim. My indicators aren't in there, so I don't know. It depends. Sometimes I do stack trades. I have one trade set up that's based on one of my indicators, and when the market is moving, I mean, I'll stack them all day long like this, okay? Do I use EMAs for trends? No, I don't. No, my indicators will not work with Sierra charts. It only works with NinjaTrader, TradeStation, and multi-charts. NinjaTrader 8 will be coming out with the indicators, my indicators, probably in January. Right now I'm on NinjaTrader 7, and that's because I like to make sure that, you know, everything's working like it should. Well, I don't use tick charts. If I'm reading volume, and I'll show you, I have a unique volume indicator, okay, and I use it on my minute chart. So in this case, you pretty much had your volume divergence here, okay, and they came back to the ATR, and your volume was decreasing. So that told me that the sellers were decreasing, okay? And if sellers are decreasing, that means more than likely it won't go down. So it would have been a good trade to the long side, which we're already in. And I mean, volume can be quite complex, which is why I didn't get into it today. What markets and times do you typically trade? I love Forex. I will trade it anytime it's moving. I've traded London, I've traded US, I've traded Asia. So, I mean, there's nothing that I would not take. I even have this where it will go to my cell phone, James, and wake me up. Futures are really limited to 8 to 4 o'clock. Would it be fair to say that you usually trade out of the money binaries because your return on investment is greater than using at the money or in the money binaries? Yes, I do look at that, Chuck. Any particular time you avoid in Forex? Absolutely not. I will trade any time frame. I don't care. You'll see me 6 o'clock at night. Nadex opens. There I am. Okay. The mentorship. Send me an email. It's better. I am thinking about doing some mentorships in January that would, you know, like stretch out for the month of January. But it would be a group of students instead of one-on-one. And, you know, you're expected to do homework and stuff like that. My clients will tell you it's like being in school all over again. So, any other questions? I do appreciate you joining me today for the webinar. I hope you enjoyed it. Of course, if you have any questions whatsoever, if you would email me, and I'll just type my email address in again. And I do suggest that you go to my website. I have a ton of articles and videos on trading binary options. If I can find that slide again. It's blog.tradershelpdesk.com. We have a ton of articles there. And you can always email me or just simply pick up the phone and call. All right. All right. I hope everyone has a wonderful day. I hope I answered your questions. Again, you can always just drop me a note and I'll be happy to answer your questions. I do think that Nadex provides one of the best trading vehicles, especially for new traders. Okay? All right, everyone have a wonderful day, and I hope to see you on December 28th.